Welcome to The Explainer. We're about to break down a really common tax form, the 1099-NEC, and a simple mistake that could accidentally land you in some serious hot water with the IRS. Let's get into it. Okay, so let's get right to it. If you're a freelancer, a contractor, or part of the gig economy, you've definitely gotten one of these forms. But here's the thing you might not know. How you report that income could be, and I'm not exaggerating, painting a massive bullseye on your back for an IRS audit. To really get what's going on, we need to look at a pretty recent change in how all this income gets reported. Because in that change, a subtle but really dangerous trap was created for taxpayers just like you. So here's what changed. Not too long ago, before 2020, any money you made as a contractor was just reported in Box 7 on the good old 1099 MISC form. But then the IRS decided to create a brand new dedicated form just for this stuff. Form 1099-NEC, which stands for Non-Employee Compensation. Now, the trap isn't the form itself. It's an old habit. A lot of people get this form, see the income, and just instinctively classify it as miscellaneous income or other income on their tax return. It feels harmless, right? Like it's just a simple clerical error. But trust me, the consequences can be absolutely huge. And here's why. When you label that income as miscellaneous, you're essentially dodging the 15.3% self-employment tax. And that tax is a big deal. It's what pays for your Social Security and Medicare contributions. You can bet the IRS is watching that line item very, very closely. So this is how the trap springs shut. The second a client issues a 1099-NEC with your name on it, the IRS computers make an assumption. That income is subject to self-employment tax. It's basically a presumption of guilt. So their algorithms see the form, then they look for the tax payment, and when they don't find it, bingo. That's an automatic red flag, and the burden of proof is now entirely on you. Okay, so what happens if the IRS does flag you for this? Well, the cost is way more than just paying the back taxes. The sources we've been digging into call this financial hit the double torpedo. And believe me, it earned that name. This thing is like a financial weapon that hits you twice. And it's especially brutal if you're a senior or getting close to retirement. It attacks you on two fronts. First, it can make the taxes on your Social Security benefits go way up. And second, it can cause your monthly Medicare premiums to just skyrocket. Let's break down that first torpedo. It gets triggered by something called your provisional income. And the IRS figures this out with a pretty simple formula. It's your adjusted gross income plus any non-taxable interest you have, plus half of your Social Security benefits. Now here's the danger. That little mistake of misclassifying your 1099-NEC income, it artificially inflates your adjusted gross income, your AGI, and that can easily push your provisional income over these critical IRS thresholds. The second you cross that line, as much as 85% of your Social Security benefits, money you thought was safe, suddenly becomes taxable income. It's a nasty surprise. And just when you thought it couldn't get worse, here comes the second torpedo. It's called IRMAA, which is a real mouthful. It stands for Income-Related Monthly Adjustment Amount. All you really need to know is that it's a massive surcharge on your Medicare premiums if your income crosses a certain line. And they call this a cliff risk for a reason. The income levels for IRMAA are incredibly sharp. We're talking if your income goes over the threshold by just one single dollar, your monthly premiums for Medicare Parts B and D can suddenly spike. We're talking an extra $70, an extra $170 a month, or even more. That one little mistake can literally push you right off the financial cliff. Okay, that's the scary part. So what do you do if you think you've made this mistake? Well, you don't just give up and write a check. It's time to shift from being a passive taxpayer to being a proactive forensic analyst of your own income. You got to find out if you even owed that tax to begin with. And here is the absolute legal key to your defense. Self-employment tax only, and I can't stress that enough, only applies to income you earn from a trade or business. So just because you got a 1099-NEC doesn't automatically mean that money fits the legal definition. And this isn't some obscure loophole. This is the standard set by the U.S. Supreme Court. In a major case, they ruled that for an activity to be a trade or business, you have to be involved in it with continuity and regularity. In plain English, it can't be a sporadic one-off thing. It has to be something you do regularly. So this is your forensic checklist. You need to ask yourself these questions about that 1099 NEC income. Was this a one-time payment for something you don't normally do? Was that money just a simple reimbursement for expenses you already paid for? Or was it a return of your own invested money, not actually a profit? If you can say yes to any of these, then that income might not be subject to self-employment tax at all. All right, so let's say you've done your homework and whoops, you did in fact misclassify your income. First things first, don't panic. There's a clear step-by-step process for correcting the record with the IRS. The solution is to amend your return using Form 1040-X. Think of it like a 4-step mission. Step 1, go back to your original return and pinpoint the exact error. Step 2, quantify the precise dollar amount that was misclassified. Step 3, recalculate what the correct self-employment tax should have been. And finally, Step 4, file that 1040-X with a very clear explanation and all your documentation to back it up. But you gotta know, you're on a deadline here. The IRS gives you a specific window of opportunity to make these corrections. As a rule of thumb, you have 3 years from the date you filed the original return or 2 years from the date you paid the tax, whichever of those is later. So if you made this mistake recently, you probably still have time to get it fixed. You know, at the end of the day, it all comes down to this. Your tax return isn't just a document filled with numbers. It tells a story about your financial life to the IRS. Making sure that story is accurate isn't just about being compliant. It's about protecting yourself from unnecessary taxes, painful penalties, and a whole lot of stress. So you have to ask yourself, is your return telling the right story?